Okay, so another indicator that is very commonly used among a lot of the traders is the support and resistance. So first thing first, what is the support? Now support is a horizontal line that you draw at the lowest point of a previous particular time frame. So let's say you're trading in the H1 time frame, then you would draw a horizontal line at the lowest point of yesterday. So support line is basically when the price goes down and bounces off a floor, okay, to put it simply. So why does this happen is because the demand or the buying is strong enough to prevent the price from further going downwards or further decreasing. Okay, so to give you an example, this one is pound dollar and an hourly time frame. So you can see that, let's say this one is the current day. I would draw a line at the previous day, okay, lowest point, which is right here on a bearish trend. So you only draw a support line when you're looking for a sell trade. You also draw a support line when you're trading at a bearish trend, okay. So the lowest point for yesterday, pound dollar, would be at this level right here. You draw it at the bottom of the wick, okay, at the lower wick. So what is the resistance? It is basically the other way around. Okay, it is like the ceiling for the price, to put it simply. So the support would be the floor and resistance would be the ceiling. Okay, so it's a horizontal line where you draw at the highest point of the previous particular time frame. So you draw the yesterday highest point if you are using the hourly time frame. So why does this happen? Is because the supply or the selling is strong enough to prevent the price from further increasing, meaning the amount of sellers are more than the buyers. So that's why the price, instead of further increasing, it starts to decrease from there. Okay, so what are the functions of support and resistance? The first one is that it's going to help you trade breakouts. Now for breakout trading, I'm not going to go into detail in the next few lessons, but right now I just want to talk about function number 2, which is prevent you from entering trades which will lead to a potential reversal. Okay, so let me just talk more about how the first function and second function works in practical real life. Okay, so for the first function, let's say today this one is the current trading day. Okay, you want to draw a line at the highest point of yesterday, then you want to look for a price breakout before you determine whether you can make a buy over here or not. But I'm not going to talk too much on breakout right now. I'm just going to talk more on the second function. Okay, so let's say today this one is the current trading day. Ignore these two time frames. Just pretend that this one is the current trading day. So I will draw a highest point for yesterday, which is right here. Okay, then if I have a buy signal over here, I wouldn't make a buy. Because why? If I look at previous day, there is a resistance that might prevent the price from further going upwards. So if I buy a signal here and I see that, hey, there's a resistance line over here, I wouldn't make a trade because you see eventually the price actually bounced off here and went back down. Okay, I would want to wait for it to break the resistance lines like this one before I decide, oh, is there a signal to buy or not? Okay, so let's change the currency pair to euro dollar. Okay, same hourly time frame. Let's say this one is the current trading day. I'll draw a previous day highest point, which is right here. And you can see that the price, it tried to break this resistance line. Okay, 1, 2, 3, 4. But eventually it did not, because the resistance is so strong that it prevent the price from going further upwards. Okay, in this case, the sellers become more than the buyers. That's why the price eventually went back down. And here's one very important principle regarding support and resistance. The more times the price tests the support or resistance line, the stronger it is. Okay, what do I mean by test? What do I mean by that? Put simply, the more price touches the resistance line, the stronger it is. This is what I mean by test. See testing as the price touching the support or resistance line. Okay, so you can see right here, there's one here. then there's a second time over here, then the third and fourth time. So we can say that the price tested the resistance line for 4 times. Okay, the more it tests the resistance line, the stronger it is. The more it tests the support line, the stronger it is. Okay, so this is basically how the support and resistance line work. It's very similar to trend line, because even for trend lines, the more the price tests the trend line, the more the price touches it or interacts with it, the stronger it is. Okay, so let me give you another example. You can see that, let's say this is the current trading day. I would draw a previous day support, because this one is a bearish trend. Okay, for bearish trend, remember we draw support. So I draw previous day lowest point, which is here. Then the price tested the support line many times. 1, 2, 3, 4, 5, 6. And you can realize that it's so strong that it also becomes the support for the following day, you see. It also blocked the price here, 1, 2, and 3, before it bounces back up. Okay, so what does this mean? It means that at this point of time, you shouldn't make a sell. Okay, you shouldn't make a sell at this area and also potentially at this area. Of course, making a sell here will be more risky as compared to here, because the support or resistance line for previous day is stronger than as compared to 2 days ago. That's why I don't really bother to draw the support line for 2 days ago, 3 days ago, unless it is a very strong support line like this one. Okay, then I would probably take this into consideration on whether I want to make a sell or not. So another thing that you need to take note of for support resistance is that your support can turn into resistance and vice versa, meaning that your resistance line can also eventually turn into support. So let me give you an example. Let's say I draw a support line over here. Okay, and you see that eventually the price broke this support line, but then it came back up and then it stopped right here. It became the ceiling for the price instead of the floor of the price. The price got blocked right here many times, and also right here. So you can see that this support eventually becomes the resistance for the next day and also the following day. You see, the price also stopped right here, and the price eventually tested this support line many times right here, and it broke here also, but it came back down. They broke one more time, then it came back down. Okay, then same thing for resistance. It also can become support. Let's say I draw a resistance line based on this day, highest point. Then it became the resistance for the next day, which is right here. Okay, tested 2 candles. Then following day, tested 1 more candle. But then the price broke after that. Okay, potentially you can make a breakout trade over here. Then eventually the price went back down here and then bounced off. So this resistance eventually became the support for the following day. Okay, the price tested this line 3 times. Okay, tested here and also here.